Hey guys, what's going on? This is Terrence Ray, and welcome to the Market Wrap, being sponsored by Four Derivatives. Yesterday's video, if you checked it out, I actually talked about the range for NVIDIA, and we got a break from that range today. As you can see, here are the lines that I drew yesterday, and and also I will put the expected move for the week just so you can see them. You see how they coincide. Bring it up there again. You can see right here. Let's see. I zoom in. Let's make it big so it makes sure it show up. Right here, you can see the top of the range for last week. Now this is the weekly option range for the week. Here, you see the market here, here. The market just stayed in between. We got a break there. Now let's go down and drop down to something like, let's look at the 5 minute. I did trade this today. Now you can see, now here we go. Here's today is Friday. Let's see if I can move it over some. You can see it came up right here. This is about 11:10. You can see it hit here and then took off up into that area, right? So at the end of the day, let's remove it. We'll remove the study, go back and drop down to like an hourly. You can see what happened when it went there. Now today, when the rest of the stock market was basically in a range to down, basically NVIDIA had a $28 move. So it broke out of that range and then gave us a big move today. This would have been like, you know, this was perfect for scalping. Like anytime you got the market contracting and then the market then explodes out of that contraction, then you get a nice range um to trade, to scalp in either direction. Like if it would have went down and broke out to the bottom side, you could have shorted as well. And then basically I'll show you the options that I was trading. You can, something like Nvidia is very liquid, and you can see you want to be in the right around the at the money options, especially when you have an expiration that's going to expire that day. I generally want to be trading the 50 delta options, and 50 delta is like right there at the money. You can see right here where it's color shaded. This is the call side. So I wanted to be on this side. And these were the options that I was trading. I actually was trading the 925 strike, which ended up like way in the money. So it was actually a pretty crazy move in the video. Also, let's take a look at the SPX so we can kind of get a gauge on what's going to happen going into next week. Same ordeal. Let's see if I can blow this up for you guys. You can see same thing. This was a little trend line that we had drew up, and you can see it gapped up yesterday. Now, actually, today it came back in like it wanted to make a move to come back down. We didn't get a big move. I'm gonna throw on the expected move for. You can see that once it broke out on, what is that, Wednesday? That's when we got the move, and then that was pretty much it for. So you kind of missed this one if you didn't catch it when it first broke out of this range. Now, next week, you can see here are the levels for next week. You can see right here, if we go to the trade tab, it'll tell us exactly how much it is for the week next week. And next week is in a shortened trading week. There will be the markets will not be open on Friday. So if you're going to trade the weeklies, you would have to be within this expiration right here. And you can see we got a $53.99. Let's call it $54 expected move, which is slightly smaller than what we had the beginning of this week. So basically, here's the range. Now the market, and that's the thing. You can kind of play it a couple ways. Wait till the market maybe comes up here, then look at taking a short, or letting it. If it comes down to the bottom, then maybe you buy it once it gets here, hoping that that option range will hold as for like support. Something else I wanted to go over quickly is the fact that the market be at an overbought level, right? Statistically, or using something like the RSI, relative strength. Let's look at. I have a scan that I use sometimes that I run, and I'll pull it up. Now, this scan is showing me that certain stocks that fit a criteria that I look for as far as shorting. And well, I'm gonna pull up Toll Brothers, and you can see that Toll Brothers is overbought on the RSI, right? So we can see it right here. And also, if I pulled up a stochastic, which I will right here, you can see that on the stochastic it's overbought as well. You guys can see the trend line that is drawn on it. Let me move the chart over a little bit just to make sure you guys can see how that. Now, yeah, see that? See how that trend line up at the top right here? See how it's right there at the top. And at the top of that trend line, we got almost like an inverted hammer candle and then a doji today. So one particular trade, a strategy that you can use, um, cheap trade, just to take advantage of if we get a quick, move to the downside, would be something like an in and out spread. Generally like to do those around 30 days. Market is extended. It's something like come here, buy one in the money, then purchase one out of the money. Now the market is closed, so it's showing that this trade is showing that you'd pay 170 for it. I did not pay 170 for it. I actually paid right around a buck, which is what you want to pay. You don't want to pay any more than half of the box. So like old school traders that say the box is since I'm coming down and buying 127, then selling 125, the box will be $2. The difference between 127 and 125. So that means max loss is 2 bucks or max profit. So basically the box is $2. If I'm paying a buck for it, then the most I can make is a buck because I can buy it for a dollar and I can sell it for a dollar because the box is $2 wide. So I'm buying a vertical spread or buying a put spread to get short. And so something like this is a cheap way to get short to try to take advantage of maybe an outsized move to the upside in this market. And so if we were to just look at this with just the RSI on there, you guys can see. Let me move this over a little bit more like so. And you can see that the market has just been going up. So all we need in this trade is for the market to maybe come down. I say maybe 7 or 8 bucks, maybe right down here where this moving average is. Get a $7 or $8 move. I'll close this trade out for half of what I paid for it. That's the trick. Instead of trying to get the whole buck, close it, try to sell it out for maybe 155, make $55 out of it, something like that. And it's better. You can do it for a market that is stretched to the downside, but it just works slower. When markets generally, when they if they sell off or come down, they generally like to move pretty fast. That will make the volatility expand on the put side and on the call side. Options will get more expensive, and then you should be able to make a little bit of profit pretty quickly. So with that being said, guys, make sure you keep tuning in. And I'm your boy Terrence Ray, um, for Four Derivatives. And be careful next week trading. Remember, we only got 4 days to trade. And with that, guys, I'm gonna be out. Peace.